Traders, YouTube traders, thanks for joining. This is a follow-up from the other day. We were talking about NVIDIA. What do we do? We also pointed out about Pure Storage, PSTG, Cloudflare NET, Snowflake, and NDAQ, and also the bond ETF. So we got to make a couple observations here real quickly. But the first one I want to talk about is the regional bank sector ETF. It's got, if we expand on it, today had up almost 3.5% on the regional banks based on the premise that the producer price index was half of what was almost expected. So it came in lower than expected, still up, but it also took a lot of fear that the Federal Reserve may have to cut rates or increase rates later this year, which was, kind of ridiculous. But bottom line is, we are looking at this chart pattern here, which shows a bullish convergence and a dump before a possible pump. Look, 1 day down followed by 2-day key reversal. So people may have been long this, stopped out. By the time they figured that they're not in the trade anymore, now the market's back up. Look at the convergence pattern here on my volume indicator. Look at the relative strength, the PMC indicator. As the market made a new lower price low, right, on a closing basis, that purple candle's a close, right? So that's lower than that closing price. Relative strength, so it makes newer low, but the relative strength is improving. Look at the volume. Nobody in their right mind wanted to sell it. Now, it's hard to see, but this is my proprietary volume tool found on TradeStation, Wealth Charts, and a few other platforms. But what I want to point out to you is when a stock or a product goes down and the momentum of the volume is still green, it's a weak low, it's a false low, and you might get a big rebound. And it did. It occurred. Now, how much more of a rebound? Well, when this is a daily chart, then maybe a couple days. Now, if that kind of pattern shows up on a weekly chart, you got something more. But on a monthly, multi-month, and that's what I'm seeing here. This market pulled back into a last conditional change. That's the white line in the sand you see in your charts. Try to explain this to you. These are indicators that are very important. They're not new. They're 20 some odd years old. I wrote about the last conditional change in my book exactly 20 years ago. Not to the day, but almost, it was 20 years ago in 2005. Candlestick and pivot point trading triggers talked about the LCC, and that's that white line in the sand. All right, bottom line. The volume is on OBV. That's on balance volume improving. But my momentum indicator says people have been acquiring and adding and adding and adding to the regional bank sector. So if this market, which is a green candle, it's kind of a hammer pattern. You can see there's the shadow. What is this indicating? That so far we are actually trading right at the quarterly pivot. That's that blue line. So we have several things going on. We got good volume, a shakeout in the market that may have been just that, a shakeout. Markets are tricky and treacherous. They try to shake out. If there's positive volume, guess what happens? They sometimes get that rebound. If this stock, let's say it's not, or this sector ETF is not that bullish, but just bullish enough, and it only goes back up to test this range high for the last November, December, if we finalize and fill that in and it gets right back just to those highs, that's a 10% move in the KRE. We're at 61, that's 67, that's $6. It's about 10%, 9% upside on an ETF. Now, here's what's important. IWM, the Russell. Now, you don't see the same type of a dump and a 2-day rally, but you got the dump and a 1-day rally, let's say, right? What does the volume show? A huge convergence, newer lows, and a huge bullish convergence, and rising relative strength, improving relative strength to the S&P 500. So bottom line, regional banks have a huge cap weight over the Russell. Domestic stocks might be something that traders could be back in on the bandwagon. They loved it up here. Everyone was buying the Russell up here at 240. They probably got out 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. Almost a month goes by of trading. Everyone forgot about the Russell. Forget about the Russell. But look at these other indicators. This is the breadth advanced decline comp ratio line. One more day of up. We had more positive advancers, 13 versus decliners, 600 today. Yesterday was also another advanced decline up day. That's what that shows. But this tool is the JP-MIC oscillator. What is it? It's kind of a takeoff of the Sherman-McClellan indicator. We modified it to adjust the moving averages to reflect the Russell, number one. Number two, it reflects the Russell stocks, whereas the McClellan oscillator is reflective of the advanced decline work based off the NYSE, which none of us are trading. So we are looking at a market that might be formed or could have formed a nice potential convergence bottom if we get a zero line breakout. Now, again, it's negative 16. That's the zero line. If we get a positive crossover in the next day or two, you got CPI, Consumer Price Index, you got retail sales out coming out this week, we got earnings on banks. You also have, again, we have U.S. Bank, we have PNC Bank, that's, again, a regional bank, MTB, Truist Financial, Regions Financial. So this week we have the Ozark Bank. But bottom line is there's a lot of small cap regional banks coming out with earnings this week. And if that's positive, that might put the bid in on the Russell. Despite the fact we got Monday, again, is Martin Luther King Day. Monday, Inauguration Day. Monday, I'm not quite sure if executive orders are getting signed and what's getting thrown out immediately on Monday, but it's also Monday, National Championship Football, Notre Dame versus Ohio State. So Monday's a really active day. And by the way, the Russell could see some very strong performance to the upside if we see a continuation of A, positive earnings in the regional banks, B, the CPI comes in tamer than expected, and then D, if we get more executive orders reflecting growth and less regulatory or just elimination of regulatory requirements for small businesses, get that out of the way. That should help the small cap industry. So we would want maybe to establish, if we get this breakout, more options for the February upside expiration. Easily, if we get a move, it's not a big deal, but we could see 233, the high of December 18th. Test that one more time. If not, test the highs at 242. So watch for the advanced decline to continue with improved volume trends. That's the key, right? So that's what I'm trying to explain. Now let me quickly review a couple things with you guys. We'll scroll all the way to the bottom. Out of my mouth, I always like to take responsibility of what we talk about. Pure Storage. All right, it didn't light the sky up as well as we thought. I liked it so much. Let me bring this, just bring this into speed for you. This is the weekly newsletter. By the way, this week I wanted to tell you can probably pause this. I'll let you read this through and through the CES show, and also we talk about the JP Morgan Health Conference here. Some great information there. You can go off and pause the player and read that through. Next, some other things that we have, technical indications. We could see a 1 to 3%, especially CPI coming hot this week. All right, we were down 1% Monday. We didn't get as much downside action as we thought. This you've seen before in previous videos. This is dogs of the market, stocks that should perform well, that have a chance to go up. Coterra Energy is doing well. Conoco, Devon. This came out at the beginning of the month for all my newsletter subscribers, which if you're interested, you should be signing up for my newsletter. What do you get? You get this every week. You get my weekly video. You get access to the live trading room. You get access to the algo room, which comes out with these trades, which comes out with these day trades, and again, has my momentum volume indicator. And you can see all of that data right in front of you every single day. So we have a 5-minute algo program running for auto day trading, a Q, NASDAQ 100, 60-minute, a SPY, 60-minute, and then we have crude oil as well as the SQQ inverse ETF. All of that, to break it down, go visit the website, personsplanet.com, get that information. So what did we do? We wanted to get in on Devon. Now, this has been we were looking for a pullback from Friday to Monday, never happened. Nike, looking for that dip in Nike to take out the prior low. It got a little weaker. We didn't get filled. Pure Storage got filled on Monday, 62.85. Cloudflare or Cloudflare, NET, NET is the symbol, got filled on half. We like to split the fills when there's a more volatile stock. I don't know if it's going to go down to the bottom, the middle, but we split orders, and that's what 50% we got filled. Netflix, let me explain this to you. I don't know if Netflix is going to 740 exactly, but if it did, I want to be buying January 24th expiration 800 calls. At what price to be determined? We got to wait till it gets there. Why? Netflix is one of those intriguing stocks that has a strong history that before earnings, which by the way, that's in the newsletter right here. Look, earnings on 121. It has something like a ridiculous track record of rallying for its earnings, but it sometimes breaks ahead of earnings. Now, I don't know if the stock is capable of getting to 740. Maybe it's, somewhere 745. It's kind of a scary monthly pattern. This would be, if this was the end of January, this is developing a 3-candle pattern called an evening doji star. Now, we don't know if it's going to form yet because it's not the end of the month, but we could go down all the way before earnings. I just know if it hits that support around 740, I want to buy because we'll more likely get a nice rebound to the upside. So if it happens, great. I don't know from one weekend when I do that newsletter, but it's at least guidance that I'm looking for more relative weakness. And until we get an actual buy signal or we hit that level, we're on guard, right? Bottom line. Snowflake, remember, we did our last video talking about Snowflake. Now, Snowflake today had a great move, and it gave up a majority of the profits. Still positive since we put that out. What do I feel about Snowflake? It opened higher, traded higher up to almost 170 and change today. Here it is, 170.20. Bottom line, look at the volume. It was positive, gave off the highs, but look at the volume today. Look at what it does on average volume, 4.5 million shares. Today did 6.7. That's still positive on Snowflake. I would appreciate it if it would clear the pivot and see the moving averages above that pivot line. I'll keep you abreast. And if we get that, guess what? More higher prices to come. So if you have TradeStation, if you have my indicators, or if you have Thinkorswim, take the PPS, get your monthly pivots up. You want to see the price action and the moving averages get back above 165. Guess what? You got game on, get long. It'll more likely have better upside momentum. And that's what I'm looking at for that particular trade. Now, I did mention that we have retail sales out Thursday. We've got a couple positions on. We've been talking about Louis Vuitton forever and a day. We have this position on from Louis Vuitton. We're in that from around 122.45. It's an ADR. A lot of people don't like trading ADRs, American Depository Receipts. But bottom line, whether it's our retail sales or globally speaking, I'm presenting the fact that here we have the market. The moving averages are up. It's above the pivots. You're in a buy. The relative strength's improving. And the volume's picking up. So I do think that we got a strong shot that we get a move up here in this quarter on Louis Vuitton to the upside. So I just wanted to bring that to your attention. Another one is a kind of like it's been dead money. I'm getting a little irritated with it. It's Southwest Airlines. I thought that we got long this stock at $29.95. It's at 33. We're making money. Big deal. The real money is, again, the better performer, but it had more risk, and that's why I went with love, which is Delta Airlines. The other one besides Delta that everyone's in, and I don't get it, I call it the doctor beater upper dog killer airline. Remember, they dragged that doctor out of his first class seat, knocked him unconscious, dragged him off feet first, literally dragged the guy through the aisle feet first, his arms. I mean, it's just like brutal, man. He attained a lawyer called Philip Corboy out of Chicago, which is a personal injury lawyer. If you get Philip Corboy, the guy's never lost a case. He is the guy, when you have an accident, you want Philip Corboy. If he takes your case, you'll be an instant millionaire overnight. And that particular doctor was. Next, they had a couple people that were flying on their airlines with puppies. They went to fly to the dog breeders to bring their little French bulldogs home, which are like $5,000, $6,000 dogs. And a couple of the airline stores told different flights, oh, you got to put your bag above the overhead bin. I don't care what's in that bag. It's like, but it's a dog. Put it up there. Dog died. So that's why I call United Airlines the dog killer airline. Anyway, this is the one everyone loves. And to me, it's like something's wrong with this stock. It just keeps making a new high, and it's got divergence in volume. I can't manage the risk, so therefore I'm not trading it, and that's why I made the decision to use Southwest Airlines. I still think there's a possibility that this one can see, and it might take a little bit more time because as a discounter, it should do a little bit better. Look at that volume on a weekly chart. It's actually leading prices, and it might need a little bit more time, or we got to wait for earnings. But with that said, we have stops in place. I just wanted to go through one of the items that I think this is a component of airline stocks, IYT, Dow theory. If planes, trains, and automobiles are going up and the transports are going up, the market's not that bearish. And so we have that situation going. And it's not planes, trains, and automobiles. It's also, we have shipping stocks, tankers, like, let's take a look, STNG. We have, here's one that's starting to get a little bit of momentum to the upside. We saw that, in fact, I'm cheating because I actually put that in the newsletter. We have, I don't know what it showed up, a couple stocks showed up on our weekly scans. It was, again, Scorpion tankers, and then we also had, last but not least, TNK's the symbol. Here we go, TK tankers. Both of them had a nice little upside off of a high close doji. That's the doji right there. And on the week, we're up since I wrote the newsletter, right? So not a big deal, but if you've got ships going, airlines going, rails going, truckers going, that's good for business commerce and a good Dow theory to support. Perhaps we get smaller cap stuff to go up. So anyway, thank you for listening. What do you take away from this? The market's not as bearish as maybe there's some inherent weakness in the MAGA 8 names. Meta sold off. Google's holding in there. Tesla's trading back and forth to the downside and the upside. So the MAGA 8 names are the ones that are bringing the relative weakness to the market. There's Apple, bang. There's Amazon, not doing much, 218 now. Google still trading in the 190s. Tesla back and forth, now under $394 on the market after that high of 478. Microsoft down today. Netflix down. Nvidia down a little bit. Still stuck at 131. Hasn't really gone very far. If you bought it up here, bad news. If you're buying it down here, a little bit better. We're waiting to get a move again on a daily PPS buy with relative performance coming in improving with volume, and we're jumping right back in on the NVIDIA bandwagon. Meta is the bad boy right now. That weighed on the overall market. So as you can see, cap weight stuff is people are taking the money off of that and they're going elsewhere. And where are they going? Well, look at the green. They're going really good moves in a lot of stuff. China's supposed to be bad. JD was up. PDD, a parent company of Temu, and Alibaba up a little bit. So, I mean, they're not tearing the sky anywhere on huge volume. But again, not all stocks are going down. What we want to focus in on, again, is those regional banks. I will keep you updated. And again, if you want quality information, you know where to find us here at Person's Planet. I definitely would tell you, sign up, subscribe for maybe a quarter. Get the newsletter. It's not going to kill you. And definitely, you're going to get some top quality research and information. Thanks for listening, and we'll see you at the next video update.